Hi everyone, I'm Rosemary Miller here with Javier Paz, the Director of Data and Analytics here at Forbes, here to talk about the future of Bitcoin futures. Thank you so much for joining me today, Javier.
My pleasure, Rosemary. Glad to be with
So,
you.
absolutely. So, Javier, why did the SEC allow Bitcoin futures ETFs to begin trading years before spot products were given the green light?
For the benefit of those out there who are not totally familiar with the nuances of ETFs, ETFs are exchange traded funds that they're a basket of holds different types of securities, such as stocks, bonds, commodities. So they wrap them into a bundle and they issue shares for that bundle, and those are the ETF shares. Now, they trade like stocks, these ETFs, and in the case of Bitcoin ETFs, there's two types of competing um, bundles, if you will. One of them is made up with financial contracts called Bitcoin futures. These are contracts that don't quite are not Bitcoin per se, but they track the price of Bitcoin. So institutions use them regularly for trading things like agricultural goods or oil or interest rates. They're financially constructed. And then there is the actual Bitcoin. So the ETF buys a bunch of Bitcoin and then they wrap it into a bundle and then they issue shares for that. So there's two competing bundles, if you will. And the SEC basically was not comfortable with the actual Bitcoin bundle. So they rejected something like 20 plus applications of ETF issuers when they approached the SEC trying to get those approved for, and this happened for years. Um, and then four companies had the clever ideas so like these are ProShares, Vanek, and I believe it was Valkyrie, who thought, well, maybe if we present to the SEC a Bitcoin futures ETF, they might go along with that. So they made their case, and it was successful. Basically, they showed to the SEC that these are regulated contracts; they're not unregulated, like is your concern. So because they're regulated and trade, they have been trading for years at the CME group, which is the main uh, futures exchange out there. They're reliable and they're safe, and you should approve it. And they decided to approve it. So that happened in October 2021, and so for 2 years, a little more than 2 years, this Bitcoin futures ETF ruled the day. They were very popular, and now came on as of January 10th a new breed of Bitcoin ETFs based on the actual Bitcoin itself.
So you briefly touched on it, but what's the main difference, I guess, in simplest terms, between the futures and the spot ETFs?
So there's actually one similarity and multiple differences. So the similarity is that both the Bitcoin futures ETF and the spot um, Bitcoin ETF, they trade like shares, and they trade at the three main places. So Nasdaq, at the CBOE, and the New York Stock Exchange, alongside other ETFs. So that thing they have in common. What is different though is their composition. As I mentioned, one is based on the Binance. I mean the Bitcoin futures ETF is using a financial contract, and the spot Bitcoin ETF is actually using Bitcoin. So that's a major difference. The future side pays dividends as of February of last year, whereas the spot Bitcoin it does not yet anyhow. There is also differences in tracking error. This is a statistic that is important for ETFs out there to measure which is better than others. So the ideal is that they track exactly the price movements of whatever they have in the bundle. In this case, the Bitcoin price. So during for 2 years, the Bitcoin futures tracked Bitcoin price fairly well. But the moment they started paying out dividends, less less well. Whereas the spot Bitcoin ETFs tend to track it much better. Um, Besides that, there's differences in popularity. We've seen a huge demand for spot Bitcoin ETFs, much greater than that of Bitcoin futures ETFs.
Mm-hmm.
Um, in terms of costs, there's something called the expense ratio that in the case of futures is about an average of 95, 98 basis points across 12 Bitcoin futures out there. Whereas for spot Bitcoin ETFs, the average price is closer to 30 basis points. So 3 times as cheaper as the futures ones. There's one major difference also, and that is the ability to short um, Bitcoin. So as you know, Bitcoin doesn't always go up, and up. Very often it goes down, 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 down a lot.
Right.
So, so if you're a spot Bitcoin ETF, you basically have one choice. You can go up and ride that train up, very briskly, but then you may be facing months of decline. But one thing that Bitcoin futures offer, um, Bitcoin futures ETFs offer, is that there's several out there. Well, there's a couple out there that basically track the price of Bitcoin as it goes down. So they can sell Bitcoin and make money in the process. So that's one major difference that will come in handy when Bitcoin prices reach record levels and then it starts to go down. So you may want to own Bitcoin, um, spot Bitcoin ETFs when the price is going higher. And when it starts to go down, maybe what you want to do is also buy some insurance in the form of an inverse Bitcoin ETF that basically makes money as the price goes down. That way you're kind of hedged and you're not losing the money on the upside.
Oh, wow.
So those are some
Okay.
of the major differences. Yeah.
Well, Javier, how are futures ETF issuers responding to the news of spot Bitcoin ETFs becoming authorized January 10th of this year? I mean, do they feel it's a threat? Are they confident?
Right. So what we're seeing is that out of the 7 issuers out there, um, 6 are holding steady and they still see the potential for Bitcoin futures ETFs. But there is one that broke rank just a few weeks ago, and that's VanEck. VanEck is a special issuer in that they have also a spot Bitcoin ETF. So they have 2 side by side, one spot, one future ETF. And they chose to concentrate on the spot. So after the new spots launched on January 10th, they closed down. They announced the closure of their Bitcoin future ETF, which had only like $43 million after 2 years. Not very much. So they are now concentrated on their VanEck HODL. That's the ETF ticker, and it has now 193 million in AUM, so the assets under management. So they view that the spot market is the future, and that's why they closed down their futures. Now the question then it becomes, will others follow suit? Um, but there's little doubt that the giant in the Bitcoin futures market, which is a company called ProShares, it's doubtful that they will follow suit with VanEck because they basically own the more than 90%, 95%, you could say, of the spot Bitcoin ETF. I'm sorry, the Bitcoin futures ETF, um, and they are the dominant player. So VanEck may have responded to the dominance of BITO rather than to the lack of prospects for Bitcoin futures.
So, how did ProShares BITO, right, ETF, perform before the spot products listed, and what is its current status?
So they had a phenomenal run between October 2023 and the launch of the Bitcoin ETFs in January. They raised something like $1.3 billion. They had initially something at that point in mid October, they had something like $1 billion. So they gained 1.3 billion in just a matter of months. But then the launch happened in January 10th, and they lost some, as of the latest figures, roughly 120 million, which is not a lot when you look at the gains that they just had. So they've been able to keep their AUM at around 2 billion, 2.1 billion, and keeping it steady, but not necessarily growing either. Whereas the spot Bitcoin ETF have seen massive amounts of growth, and some ETFs that launched just over a month ago, they've raised, in the case of um, BlackRock, 6.4 billion, and Fidelity, um, their Bitcoin ETFs has raised 4.5 billion.
Mm-hmm.
So massive amounts in a very short time means that maybe a year from now, this spot Bitcoins ETF may dwarf the size of the futures Bitcoin ETFs. But the demand for Bitcoin futures ETFs remains. It's just not growing as fast as the spot side.
So, do you believe futures ETFs can actually exist in a world with spot products?
Oh yeah, I definitely think so. They are more liquid in that they trade often. There's something called price discovery. That if you are a fund manager and you want to check what is the current price of Bitcoin, you go to the futures market where you can find out very quickly what is the liquidity like, what's the price like, and that's it's more efficient that way. There's also something like I mentioned earlier, the ability to short Bitcoin futures is very important because let's say, for example, the market grows by the tens of billions for the spot Bitcoin ETF, and it has a phenomenal run in this year, and then the market starts to turn south. And what are these managers to do? So one option that the futures market gives them is that they can own Bitcoin futures ETFs that are inverse. Inverse in that they make money when the price of Bitcoin goes down. So that way they hedge that exposure and they keep those gains for investors. So for that reason alone, I think the future of Bitcoin futures is well grounded, and I think it has a lot of potential.
Well, is there anything else on your radar regarding Bitcoin futures that you believe should be on ours?
Well, I know that there's an interest of ProShares to continue to launch ETFs, some of them based on Bitcoin futures, different varieties. In some cases, they're using leverage and other ETFs to come up with a mix that gives investors a multiple of Bitcoin. So the more risk tolerant type of investors, typically institutions, more aggressive funds, they can gain 1.5, 2 times the movement in Bitcoin, which already is pretty high. So if you want to, it's like placing a bet in the in a casino that you want double the risk of whatever you're betting, and that's what is going on also, and that, by the way, that kind of bets exists in other instruments. It's not just unique to Bitcoin. It's just common among sophisticated investors that can tolerate that kind of risk.
Hmm. Well, thank you so much for joining me today, Javier.
My pleasure. Thank you, Rosemary.